Welcome back to the ETF Inspector. It's Tuesday, December 9th, a little after 9 o'clock in the morning. And being Tuesday, that means it's declaration day for Group 1 of YieldMax funds. We've got their YieldMax website here, distribution schedule. Yesterday, they actually announced not these Target 12s, but the Target 25's. I believe they're calling them Group 3 now. So, yep, they announced them yesterday, the 8th. Maybe we'll throw those numbers in at the end just to be quick, but today is Group 1. Where are we? December 9th. So you can purchase these if you want to today, and you will be eligible. You'll be of record tomorrow and get paid on Thursday. Now, since we're on that point, I've heard from a lot of you that you are still waiting or you're getting very delayed payments, especially people with Robinhood and Wealth Simple. So I have relayed that information over to the people at YieldMax. They are aware of it and looking into it, and said they will provide any information that they get as they dig into it as it comes up. So I'm on X at ETF_Inspector1. Always repost the distribution announcements, but we won't go over them in this format. I got a couple different ways I like to do it. For starters, I type them all into my own chart because it's got the it's going to update the live. This is the most current price on each of the funds, and then that gives us an annual yield percentage. We don't want to go over everything right here because we've got more info on the next page, but we like to declare a winner. And you saw in the thumbnail somebody paid over 100%. I don't know that that's happened in a while unless I'm just forgetting, but FEET, it's one of the Dorsey Wright funds, the featured 5, paying well over 100%, 107.3. So there's a big surprise. We'll get into all the numbers on the email though. So you receive an email. Wow, it actually was late today. It's almost always 6:55, but it was 6:58. If you're interested in getting this email, just in case I don't want to forget at the end of the video, show you how to do it from YieldMax ETFs. It doesn't matter which page you're on. You've got that Stay Connected button. You click that and you just fill in your information there and click Submit, and you will start receiving their announcements. That way you would know when reverse splits are coming, when prospectus changes, or when distribution announcements are coming. So today's is a distribution announcement. Again, we can see Group 1, X day is tomorrow the 10th, and payday is Friday the 11th. So we'll just run right down in order. We've already seen that FEET is the winner, and now we will just one by one. Chippy, the Semiconductor Portfolio Option Income Fund, 39.84 cents per share, is a 35.71% annualized yield, and 98.11% of that is return of capital. So nearly all of it, less than 2% was actual income, and so generally that's going to happen when the holdings go up and you lose the trades, but it still works out. I don't want to every single video explain return of capital, so if you're not understanding, check out previous videos on that. We've been beating the return of capital horse to death lately, but also always want to let you know these are estimates. It is definitive of what this week was, but that's not how a year is made, right? If you make a trade first thing in the year and you make a profit, and then you make losing trades the rest of the year, you don't still pay taxes on that profitable one if your losses offset it. And so while this is the case for this week, it won't tell the full picture until the year is done. Next up, we've got FEET, YieldMax's Dorsey Wright featured 5 income ETF. 56.54 cents is 107.15%. I don't believe these are usually even on the high end of the percentages. So for this one to be over 100, that's crazy. 97.94% of that is return of capital. 5e is the Dorsey Wright Hybrid 5 income ETF, paying 38.95, nearly 39 cents, a little over 61% annual yield, and 0% of that was return of capital. So they did make a ton of income. Now, seeing as how they generally are trading the same the same, not definitely, but generally trading the same underlyings, to see one be all income and the other almost all return of capital, without going into the, downloading everything and looking at the numbers. My guess would be they sold some shares or closed out a synthetic position or something along those lines at a win that ended up bringing in enough income to cover over any of the weekly options trading losses. But just take that for what it's worth. That's my guess on what happened, not my I haven't dug in to definitively tell you that. GPTY is the AI Portfolio Option Income Fund. 30.79 cents is a 35.76% yield, 100% return of capital. LFGY, I provide daily coverage on LFGY as well as SLTY and ULTY. If you're not familiar with the channel, I'll let you know what trades were made each day, as well as taking a look at the holdings and the options and how far in or out of the money they are. A little self-plug. 33.14 cents per share is the payment. 60.62% is the annual yield. 100% return of capital. Next up, we've got QDTY. It's part of a three-part series here. They are 0 DTE, meaning they trade options that expire the same day throughout the week. Q is on the NASDAQ 100, R is on the Russell 2000, S is on the S&P 500. So QDTY, 34.73 cents per share is 40.65% annual yield. 67.12% of that is return of capital, so about 2/3. RDTY on the Russell 2000 is 33.62 cents per share, 43.15% annual yield, 100% return of capital. And SDTY on the S&P 500, 23.55 cents per share is 27.15% annual yield and 59.63% return of capital, so a little over half. Next up, we've got Ulti and Salty. They are kind of opposites of each other, but not directly. Both could go up or both could go down on the same day because they hold different funds. They just do an opposite strategy. Salty being a short option income strategy where they short funds and then try to generate income selling puts, and then Ulti, a more of a bullish option income fund where they buy the funds and buy the underlyings and then sell calls. They do sell puts and calls and vice versa in the opposites as well, but it's not the specific of the strategy. Salty paying 47.41 cents per share is 70.35% annual yield, 100% return of capital. Ulti paying 54.61 cents per share, also this one's 70.89% annual yield. So seeing them pay right around the same, 100% return of capital. YMAG, the Magnificent Seven Fund of Funds, 12.82 cents per share is 45.56% annual yield. That's 55.85% return of capital. And finally, YMax is the Universe Fund of Funds. So basically all of the individual income funds collectively in a larger fund. And I did get to ask the question in an interview because I had a concern when I talked with Mike Coe. So if you missed that interview, check that one out for sure. I've got the interviews in the ETF inspections folder, even though it's not an ETF inspection. Didn't know where to put it. But we did go into talking about fees, because my concern was each of those, every fund has a fee. So then collecting all the funds within a fund, is the money getting taken out in fees twice? Are you paying twice as much? And he stated that no, that's not the case on the fund of funds, because then that would just naturally be hurting their own thing. So 11.42 cents. So that's better. I believe last week was like 8 or 9 cents. I'm not certain, but 11.42 cents per share is 55.16% annual yield, and 81.25% of that was return of capital. All right, so try to keep the videos short and sweet on Declaration Day. Trying to upload from the field rather than at home is definitely slower. We'll just very quickly give you the what are they called? Target 25's that got announced yesterday. The only problem with these is it's already too late to buy them if you want these distributions. So just real quick, the Target 25 fund for MSTR is MSST. They announced 22.62 cents per share. The Target 25 for NVIDIA is NVIT, announcing 23.87 cents per share. And for Tesla 25, Target 25 is TEST, T-E-S-T, announcing 26.44 cents per share. You can see the return of capital on the side. It's mostly, in all cases, 98+% for MSTR, 86% for NVIDIA, and 57% for Tesla. All right, that's it. Thank you for watching. Appreciate all the support. And go get back to work. That's what I got to do. So catch you in the next video.